Good afternoon, everyone, and welcome to today's webinar, Government Stimulus Packages by Ben Walker from Inspire. Today, you are listening using your computer speaker system by default. You will have the opportunity to submit questions to Ben by typing them into the questions pane on the control panel. You may send in your questions at any time. We'll collect these questions and address them during the Q&A session. Today's webinar is proudly sponsored by Entity Brands, home to 13 of the world's largest uniform brands, including Nike and Port Authority. The power of the brands is in your hands at entitybrands.com.au. To give a brief introduction on today's presenter, Ben Walker is an author, award-winning accountant, and the founder of Inspire CA. I will now hand over to Ben.
Hey, thanks, Ida. Thanks for the introduction, and yeah, nice to meet everyone who's joining today. And I guess, yeah, before I kick off, I think we're in a little bit of a new territory for, many different aspects of life. And one of those is actually business life. And so I think we, as business owners, we've got a lot of pressure on us to sort of get our, not only get our own families and our own businesses through this time, but also make sure throughout this challenging, couple of weeks and couple of months that we also help our team through it how best we can. And what I'd love to sort of share is, the government's actually been great, in my opinion, to release a number of different stimulus measures. And what my goal is to break down each one of the points or the key ones for business owners to take away and to actually make sure they implement if they're relevant. So yeah, that's what I'd love to sort of walk through today. Ida's given me a little bit of an introduction, yeah, so I won't spend too much time on that one. But I might also mention as well that I've actually invited our accounting team. So that's the people you can see in front of me here. We've got Reggie, Sakshi, Rizal, Gulshan, Ali, and Jamie. And now they're joining me as panelists this morning, this afternoon already. But yeah, so they're joining me as panelists, and they'll be answering your questions live. So you'll see a little Q&A box. There's two sort of boxes where you can send us messages. One's the Q&A or question and answer box, and the other one's chat. So if you can make sure that any questions you've got about these stimulus packages, if you can pop them in Q&A, that way our accounting team can work through these one at a time. So we want to help you as best we can. And yeah, if you've got specific questions we don't cover, then that's the place. And we will be spending a bit of time towards the end of the webinar as well to go through any remaining ones. So yeah. The other thing I'd like to invite you to do as well is get out your to-do list. Now, the reason why is because we're going to be going through some things that you can instantly action. And what I don't want you to do is sort of hear these ideas, or we talk about things like JobKEEPer or this magical 100 grand that might appear on our BAS, things like that, and you to not have put the next steps down to actually registering for them and expressing your interest for them with the ATO, for instance. So when there's something to do, I'll mention that, hey, add this to your to-do list. And so here's an example of, something we use Trello and a few different online versions of to-do lists to keep a track of stuff. You might just want to use the pen and paper that you got near you. But yeah, so that's important that you actually make a note of what you need to do as a result of listening to these stimulus measures. And here's another bit of a fun photo of our team as well. So we've all gone from working in the office together, and now we're all climbing the walls at home. So just also want to remind everyone that we can't stop laughing even through such a challenging time that we're going through as a world, not just as a nation, but as a world. And it's yeah, we need to still have fun. And also, again, before I get into anything accountancy, as business owners, there's just so many pressures on us. And so one of the things that we just can't stop doing is looking after ourselves. And here's two suggestions that I've got on my phone, which is on the left-hand side, it's your sort of physical body, and it's making sure you're moving your body and getting a bit of a workout in. Fitbod is an app which they actually have free, no equipment. You can do at home workouts, there's sort of COVID-19 promotions where you can get access to some free workouts there. And then on the right-hand side, similarly, Headspace, which is a mindfulness and meditation app. They've also got some free resources there to take care of our mental health throughout this time, which I think is actually one of the most significant risks at the moment, more so than the virus itself. If you haven't already got something like this in place, then maybe add one of those two or both of them to the to-do list. And when we talk about the stimulus packages and the measures that the government's released, I do want to remind everyone that some of these, like, we haven't even known about these things for a month yet. Like, some of these strategies were even released last week. And what that means is the legislation, some of it hasn't even been confirmed. The government is still releasing fine print. Like, even over the weekend, they released a huge fact sheet on the JobKeeper program. What we've noticed throughout this time is it's actually subject to change. So week to week and day to day, while the government's not going to often go back on their word, that they definitely clarify stuff which may have changed our understanding from time to time. So what I'm going to share on this webinar is as current as we know it today, and our team have been being kept up to date. We're reading the fact sheets as they're released. We've got Jamie, who's one of the panelists online, who's basically dedicated most nights over the last week to keep up to date on some of this stuff. So I just want to sort of thank the team for that. And here we go. So the government's actually announced $320 billion in stimulus packages today. So it's an incredible amount of money. So I'm just trying to find my pen here. There we go. So the first one here was announced on the 12th of March. So we're just under a month from that date, and that's where they announced quite a few different measures, anywhere from the $750 payment if you're on benefits from Centrelink, through to the first version of the BAS credit, and then increasing the instant asset write-off. So there's some of the key ones that they announced there. But then I think that, between the 12th and the 22nd, the government realised that, hey, this is a bigger problem than we originally thought. So we need to up our efforts here. And then here they announced $66 billion worth. So that was huge. And then the latest one, which was actually last Monday, was the biggest yet. So it was an additional $130 billion. And this is great news for businesses, because this is where the JobKeeper package lives. And this is the stimulus measure. The JobKeeper one is, I think, the biggest one that businesses who have had a fall in revenue are going to get access to. Like, this is just such a great thing for us and our team members. The government's also released, I think, they're $15 billion of their own money that they're making available to businesses, and they're backing banks as well. So we're starting to see some of the big banks like NAB, CBA, and the bigger ones release their COVID-19 packages, which are kind of in tandem or backed up by the government. I think for 50 cents in the dollar, the government backs the bank, and they're making it easier to access lending, which is pretty cool. So in terms of the JobKeeper, sorry, I won't go into that yet, but the other question we have is when does this stuff actually take effect? When can we get access to the funds? And so this is a summary. You might want to take a screenshot of this, because some of the questions we've been getting from clients is, well, I can't afford to pay my team $1,500 a fortnight because I've got 10 team, and that's 30 grand a month. So I've got to basically pay 30 grand in advance, and then the government might give me my money. So we've been getting a lot of questions like that. And so seeing this timeline visually, where you've got now versus and then as we go down the list, it's further away. These are some of the measures that that is in place that you can access immediately here, which is not much. Like, to be honest, this is not much that we can get right now. This is region and community support, which I'm not actually sure what the fact sheet's referring to here. But from the 30th of March, we can register for the JobKeeper payment. The first round of $750 payments to households, and that was to people on certain benefits from Centrelink. That was paid on the 31st of March. So that's last Tuesday from memory. And then in terms of when the things are going to hit for employers, it's this date here. So one of them is the JobKeeper package is only going to start paying in the first week of May. And the other one, I'll go into each of these a little bit more detail, but the benefit of up to $100,000 on your BAS, those payments or the credits actually start happening in the 28th of April. So we've got a couple of weeks until this stuff, like these are the two here that will really help a business cash flow, in my opinion. The other stuff is like, okay, but yeah, these two are where the rubber hits the road. I've just got my pen I've got to get rid of before I change the slide. So what I might do is have a chat about the JobKeeper program. And this is the one that was literally announced just over a week ago, last week, Monday. And it was to supplement or to help what already existed, which is what the JobSeeker program was. So this is a very high level overview of the two different programs. So JobKeeper the purpose of that is to keep people in jobs, like it says it on the tin. And the purpose of the JobSeeker it used to be called New Start Allowance, or basically it's if you don't have work, if you're unemployed, then you can access the JobSeeker, or a lot of Aussies know it as the dole. So JobSeeker is the dole, and JobKeeper is a new payment, so it's brand new to help businesses keep their team employed. Now, in terms of the eligibility, JobSeeker is that you're not employed, or they've recently adjusted the rules to include, let's say, a casual employee loses a lot of their hours, and they're still getting some hours, but they're not unemployed. Then there's provisions if you've lost a good portion of your income. Versus the eligibility for JobKeeper is you still need to remain employed or connected to your employer. Now, what that kind of means is, like, let's say for our accounting team, we're all able to work from home right now. So the only thing that's changed with their job and working conditions is just their location. But if we compare that to the, let's call it the beauty therapist or the personal trainer at the gym who's been forced to stop working, like the government has actually demanded them to stop working, then they're usually the business has either terminated their employment or stood them down. So that's a bit of a buzzword at the moment. I didn't even know what it meant until a few weeks ago. So standing down is basically putting your employment or employees on hold. Now, if you have stood down your team and then receiving no income, then the JobKeeper, this is what it's meant for. So basically, you as the business owner pay them this $1,500 a fortnight, and then you'll get reimbursed that $1,500 a fortnight by the government. So that's how that one works. Now, JobSeeker, you're unemployed, you've got way less income, and you have to basically apply to Centrelink or Services Australia to see how much that you're entitled to there. Now, keep in mind, this one is income tested, so I'm just jumping down a few lines here. So we do have an income test with JobSeeker, and there's no income test with JobKeeper, and there's no asset test. They removed the asset test for JobSeeker, I think in the first round stimulus package, which is great. Now, my perspective on why they released JobKeeper, or why they did it the way they did in terms of administration, is what we saw on the news the first week or two that this virus got really serious in Australia, is we saw the Centrelink lines just pouring out the door, around the corner, around the block, which isn't great for social distancing, but it's also going to put a huge strain on Centrelink services. And so I think the government's quite wise, although it does have challenges for the employer, but the administration of JobKeeper is actually through the employer itself. And you can see the difference between the pay rates. You get up to $1,300 on JobSeeker, or JobKeeper is a higher rate of pay. It's an extra $100 a week, maybe even more in some cases, than the JobSeeker. So, so yeah, I guess if you're an employee, or you were employed and you just applied for JobSeeker, what they're encouraging people to do is go back to your employer and see if the employer is eligible for JobKeeper, and take the pressure off Centrelink. So this is definitely the JobKeeper is definitely the better one as an employee, or someone who may be without work. Now, on the next couple of slides, and sorry, I do have to get rid of this. My drawings all over this. Oh, there we go. Yep, so under the JobKeeper payment, businesses impacted by the coronavirus will be able to access a subsidy from the government and basically continue paying their employees. Now, the date that this starts accruing from, or that you can pay your team members from, is the 30th of March 2020. So that's the date that they released that Monday, for a maximum period of 6 months. So I think this finishes up in September, which is great. Now, on the next couple of slides, I've got eligibility conditions for the business, but also the employees. Here we go. So in terms of employers, so this is think of your business. So your business has to have a turnover of less than $1 billion. So I think that's going to be most people on the call, on the webinar, and their turnover. So your turnover has to be reduced by more than 30% relative to a comparable period a year ago. So basically a 30% drop in sales. Now, there is a 50% one if your turnover is more than $1 billion, but I think that's, we might just keep moving. And also, if you're a bank and you're subject to the major bank levy, you don't get it as well. So, so again, I don't think that's going to be anyone on the call. Now, it's also only eligible for people who've got employees as at the 1st of March. So this is before all these announcements were made. And this is kind of to stop people from just like hiring a bunch of their mates, I think, and saying, oh yeah, I employ people. Let's get this $1,500 a fortnight. And so, and also not-for-profit entities are also included in this. And self-employed individuals. So a lot of our clients, especially with the earlier stimulus packages, were wondering and saying, hey, this is great for my team, some of these stimulus measures, but what about the business owner themselves? Well, the great thing is the JobKeeper program actually accounts for the business owner. And so you might be eligible basically to receive some yourself, regardless of if you're on the payroll or not, which is kind of cool. And just a reminder, I haven't seen too many questions come through, but if you do have them, just pop them in the chat box. We might have already had a fair few answered by the team, but yeah, you're more than welcome to ask questions as we go. Now, in terms of your employees, so you can't, unfortunately, you can't just include them all, but there's special sort of conditions around who in your team is eligible to receive the JobKeeper payment. So you've got to be eligible as a business, and then you've also got to match that with eligible employees. So in terms of who they are, they need to be employed. So they can be stood down, or if you've fired them, made them redundant, you can rehire them, which is kind of cool. So we've had clients, and I know of business owners who've had to let go, a few of their team, tens of their team, or I even know of someone who had to fire 100 people. That's a horrible thing. This JobKeeper program actually gives us the ability to go back to them and say, hey, circumstances were different when we had to let you go, but here's a great opportunity if you'd like to be rehired, which is great. That the employees also have to have been employed at 1 March 2020. They need to be full-time or part-time or long-term casuals, and that means longer than 12 months with the business. Which is cool. They need to be 16 years of age, so you can't, if you've got young kids who've been helping you in the business and they're on the payroll, then unfortunately if they're under 16, then they cannot be eligible. Now, this is where there's been a bit of a hot debate in terms of who's eligible or not, because the purpose of this is to keep Australians in jobs, and so we've seen the eligibility criteria be Australian citizens, the holder of a permanent visa, like a permanent resident, and I actually don't really know what some of this is, but a special category visa holder, a non-protected special category visa holder, or been residing in Australia for 10 years or more. So I don't even know what that is. But I don't think it's going to be many people. And here's the Kiwis, the New Zealanders. So a special category subclass 444 visa holder. When this was first announced, I don't think the clarity was there on, if someone's from New Zealand, they've been living here for 5 years, 10 years, whatever, and they're on this subclass visa, would they be eligible? And that's great news for them. And then this one here is to make sure people aren't double dipping. So you can't get, let's say you're part-time for 2 or 3 different businesses, you can't get $1,500 per fortnight from all 2 or 3. So that's the key there. And so as a business owner, if this is something that you're keen to explore, then what I would do is make sure that you compare your employee list and make sure you just tick off these conditions, like if they're casual, have they been there for more than 12 months? Are they at least 16? Are they either stood down, or can we rehire them? Are they Aussies, PRs, or unfortunately some of the visa types are student visas that aren't eligible to receive this payment, and also the working visa, the 457 visa. So they're ineligible visas. So you may have people who work for you that aren't eligible to receive it. So just be careful and not just paying everyone. Make sure that the team member is eligible. I can see some questions come through, but yeah, hopefully our team will be onto that in a sec. And I might stop just to check the questions at the end of the JobKeeper section here before we go on to the next one. So in terms of application, so this is a to-do list for everyone who thinks their revenue might drop by 30% or more. Is if you go to if you go to the ato.gov.au, you can actually register for or express your interest for the JobKeeper payment. So there's no formal application ready just yet. And if one of the team, could you just pop that direct link into the chat box for everyone watching to basically go to the ATO's website and register if you think your turnover will be dropping. Now they'll be able to, the ATO will be in contact with you. They'll send you a text message or an email once they've released the way that you actually go and apply for the JobKeeper program. But there's no actual way to go and do that right now. Now keep in mind, just read through this. So you also need to pay your eligible employees a minimum of $1,500 per fortnight before tax. Now, questions we commonly get is, do you have to pay super on it or not? Well, if the person is working for you, then yes, you're still working, then yes, you do need to pay super on whatever wages or hours that they're working. But if they're stood down and then they're not working for you, but you're still paying the $1,500, then you don't need to pay super on someone who's stood down or not actually providing you any work hours, if that makes sense. But for you to be eligible to be reimbursed for this, you do need to make sure that you're paying them $1,500 per fortnight. Now, keep in mind as well, this is where we also get asked, well, when do I get the money, and how do I know if I'm approved, and things like that. Unfortunately, we just need to go on the best information that we have, and that means using the eligibility criteria that the ATO shared. And if you fit within that, then you should be safe to do so. And as long as your employees, you've ticked off that they're eligible as well, then you've got a fair amount of certainty that you will be eligible to receive it. Now, you also have to cash flow the $1,500 a fortnight per employee between now and early May, when you're going to receive the payment from the ATO. So keep in mind, you need to consider cash flow, and yes, that's tricky, but we are aware that banks are aware of this problem, and you may even be able to call your business banker and just ask them if there's any way that you might be able to access overdraft to pay wages in the meantime, and then be able to receive this JobKeeper payment in early May. I can see the questions start to come through now. There's 5 there, but we're almost finished this section, and then we can run through some JobKeeper questions. Alrighty, so this is where we've got people without employees. So businesses without employees, such as like a sole trader, or let's say you have a family trust or a company, but you don't actually have any employees, then you can still register your interest, and you should be eligible in some part for the JobKeeper payment if your turnover has dropped. You'll still need to provide an ABN for your business and nominate an individual. So what that means is, let's say you've got husband and wife who run a business in a trust. Unfortunately, the rules are saying that only one of you can receive the JobKeeper payment. So even though you both work in the business, unfortunately, only one of you can, which is a bit of a tricky one. But anyway, that's the rules we've got to work with. And also, you need to provide a monthly update to the ATO. So again, the detail of how we do that is yet to be confirmed, but you'll need to make sure that you keep updating the ATO with your turnover. And I'm pretty sure that's with employees or even without employees. We just need to keep them in check. And what they're monitoring for there is your business back? Like, if you've lost 30% or more of your revenue, is your business now back on track? That's really that reporting, or what the purpose of that is. And once your business is more than 30%, once your business is sort of heading back on track and you're down less than 30% on your turnover, then they may stop paying you. So that's what you need to keep an eye on as well. Now, this is where it gets into a fair bit of the detail. And so we've got a couple of examples, and these are copied literally straight from the fact sheets. And it provides a couple of different scenarios where, let's say, an employee, Anne, who's a permanent full-time employee, she's getting $3,000 per fortnight before tax, and she continues working for the business. Now, the business continues to pay Anne her $3,000 a fortnight, and the business will receive $1,500 per fortnight from the JobKeeper payment to subsidise the cost of her salary. And the business will need to continue paying superannuation on Anne's income. The reason why the super's payable is she continues to work for the business. If she was stood down, you could still pay her, I think you can still pay her normal salary, but as long as she doesn't work for the business, as in provide her hours, then you don't need to pay this superannuation guarantee. I think it's definitely a commercial decision if you stand someone down and pay them their normal rate. I would probably, for a cash flow perspective, if you had to stand people down, pay them the $1,500, which is the $1,500 per fortnight, which is the JobKeeper amount that you'll get reimbursed. Now let's say you're Nick. So Nick is permanent part-time and earns less than the JobKeeper payment per fortnight, $1,500. So he gets $1,000 a fortnight. Now, and he continues working for the business. So the business has to pay his ordinary worked $1,000, but he needs to be paid an additional $500 per fortnight to take it to $1,500 before tax. So you need to be paying your eligible employees at least that $1,500 for them to be eligible and you to be eligible to receive that reimbursement. And so this might mean a pay rise for some of your team. If they're an apprentice and they're getting less than 15 per fortnight, or they're part-time, for instance. So these are the considerations that you need to take when you look through your team. And so the business receives the full $1,500 per fortnight before tax. Now superannuation is only payable on the amount that Nick worked. So only on the $1,000. There's no super due on the $500, if that makes sense. So it's a little bit tricky, and you may need to go through your team one by one to work all this stuff out. Next page here. So employees who have been stood down. So this example is a beauty salon. Ordinarily, she employs 3 permanent part-time beauticians, but she's had the government directive to literally shut down, so to close the doors. So she's been forced to stand down her 3 beauticians without pay. Her turnover obviously has declined by more than 30%. She's eligible for the JobKeeper payment, and she passes on $1,500 per fortnight before tax to each of her 3 beauticians. Zara will maintain a connection to her employees, as in they're not terminated, they're just stood down. And as soon as she opens her doors, she'll rehire them. That's the sort of intention here. The whole reason why it's called JobKeeper. She's required to advise her employees that she's nominated them as eligible. And it's up to Zara whether she wants to pay super on the additional income, so the $1,500 per fortnight, because it's not required under the super rules. So there's an example if you've had to stand people down throughout this. And in terms of the questions around standing people down and how does that go with their contracts, we've worked with HR experts and employment lawyers on that stuff, because it's different in each state. So you need to be careful there, and also we aren't actually ourselves licensed to sort of talk about that stuff, whether or not you can legally stand someone down and can they go to Fair Work and say that's unfair. So if you do need help around that, then we can guide you on who the best person might be to chat to with that. Alrighty. Now, in terms of what the employer has to do, you need to register your intent. So that's what I said before, and hopefully one of our team has posted the link in the chat box on that, on how to register. So register under your business name with the ATO, and then you need to provide info on your employees. They'll also use single touch payroll to make sure that you're paying them the $1,500 per fortnight. And so if you haven't yet registered for single touch payroll, which then I'd absolutely recommend you do that within your payroll software to make sure that there's no hitches with you getting reimbursed this $1,500 per fortnight. Then you also need to ensure that each eligible employee gets $1,500 per fortnight. And you need to notify all eligible employees that they're going to be receiving the JobKeeper payment. And then the last one there is talking into the reporting requirement with the ATO. So that's your obligations. Now there's also obligations on the employee as well. So your team members, they'll receive a notification if they're eligible. So that's what you do if you have eligible employees. Most of them will need to do nothing after that. In the following circumstances, they'll have additional obligations. So if they work for more than one employer, they must notify who is their primary employer. Now, the guidance we've got with that is when they give you your tax file number declaration, if they're claiming the tax-free threshold with you, then you're probably going to be the primary employer. But if they're not claiming that, then someone else is likely going to be the primary employer. That's the guidance we've got on there. Employees that are not Australian citizens must notify their employer of their visa status to allow their employer to determine if they are eligible or not. So that's what they need to do. So you need to check that with your team. Also, employees that are currently in receipt of income support. So what they're referring to here is if they're already receiving JobSeeker. So let's say you had to let someone go, or you cut their hours down and they've gone and applied for JobSeeker, then they need to let Services Australia or Centrelink know immediately that they're going to be getting the JobKeeper payment. So that's the obligations on your team. Cool. And yeah, so there's an example here where someone's applied for JobSeeker, but they let Services Australia know, and then they get the JobKeeper payment from their employer. So I might sort of just stop us here and just review some of the questions that have come through. I've just got to go into another part of my screen to be able to see the question. So one of the questions that's come in is Alexander's asked, can you please clarify, if cash flow is tight and we are struggling to pay wages, can we ask the employee to take paid annual leave? If so, do we pay them as normal, but they eat into their annual leave? How does that work? So this is kind of a question that's for the HR experts, unfortunately. But the guidance I've seen from this this question particularly is if you have a mutual agreement with your team, then you can basically do whatever you mutually agree to. It's when you start forcing them to take leave, you might get into some issues. So if you talk to your team and you say, hey, we've even seen this sort of outcome. If you say, hey, look at the conditions of what we're facing at the moment. We want to keep working with you at the other side of this. So can you please take some annual leave, or even leave at half pay, and we'll extend your annual leave will basically last for twice as long. Again, the mutual agreement is key there. So you absolutely have to do that. Otherwise, yeah, it might be different state by state on what else you need to do if you're not getting their consent or help. So that kind of, there were other questions there, but it looks like our team are on top of that. So thank you so much, team. And so what I might do is shift into some of the other stimulus measures, and then we can wrap up if there's no more questions. So in terms of the stimulus package 1, so this was the one that was released on the 12th of March, and the $17.6 billion package. So one of the big stimulus measures was the instant asset write-off. Was increased from $30,000 to instantly deduct something up to $150,000. Now, what they're basically doing here is encouraging businesses who have cash to spend it. And that's more so on things like cars, or if you're a tradie, you might get a ute or something like that. Before the 12th of March, your purchasing limit was $30,000. So let's say you bought a large printer. The printer was $20,000. Now, because it's under 30 grand, we can write that off. But if it was a $35,000 printer, then we'd need to write that printer off over a number of years. And we call that depreciation. Depreciate it over a couple of years. Now, that limit now is an asset that you use for business purposes up to $150,000. So that's a truck. You can go and buy a truck, and as long as it's commercial and used 100% for business, you can write the whole thing off, which is kind of cool. Now, keep in mind with cars, because a few clients have asked, oh, is this a good time to upgrade my car? There is depreciation limits with cars, and so make sure you check with your accountant or your advisor on the type of car you're buying to make sure that, let's say you're trying to buy a 7 Series BMW, and it's up near this 150K mark, then that to me will not be eligible for the full amount. You'll only be able to claim just over a third of that amount. So Yeah, so just watch the car one. Now, this is a related one. It's to do with depreciation, but it says if you buy an asset that that you can't claim 100% of, and this one goes to 30 June this year, by the way, 150K. But let's say you're after 30 June and you're buying a decent or a big asset, or your asset's worth more than 150 grand, then there's an additional incentive to write half of it off, but up until 30th of June 2021. So you can claim 50% in the first year, and then the normal rules, whatever that asset is, from there. Now, as a small business, normally you'll be writing off the rest of that asset, 30% of whatever's left per year. So yeah, I mean, those two, to me, these aren't the groundbreaking ones. They're just great. Like, you know, if you were considering upgrading a commercial vehicle, or you know, buying a printer or a piece of equipment for the factory or the office, you know, it's a great time to do that if it's an expensive bit of machinery. Slide. But this is one of the earlier measures that were released. I'll skip that one for now because I'll go into a bit more detail in a moment. Now this one here is for apprentices. So if you've got apprentices and they need to be registered with a certain organisation as apprentices, it can't just be someone who's new to the job. But if they are apprentices, then you get a 50% wage subsidy for up to 21 grand for trainees or apprentices. Now you must have under 20 employees. And the date range you can claim this over is the 1st of January through to the 30th of September. So that's kind of a cool one. And then one they announced in the first round stimulus was the $750 payment. And that was to people on Social Security, veteran, other income support recipients, and eligible concession card holders. Now, I mentioned at the start of the webinar, it was actually 3 rounds of stimulus package. When they announced the second round, they doubled this payment. So basically, if you fit into this description, you should have already got your first payment of $750, and you'll be getting another one. Now they doubled that payment, which is kind of cool. Now we're going to dive into that. I think the measure they call it is boosting business cash flow. Or employer cash flow. Basically, what they're doing, the government are doing with this measure, is giving you a credit on your BAS for the pay-as-you-go withholding that you withhold from wages. So when we pay one of our team members, let's say we pay them $1,000 a week, we'll withhold tax from that. Maybe it's $200 a week. So this measure gives you a credit of that $200 a week. Now that's simplifying it, but how it works is, and ignore this because this was the first stimulus measure, they've updated it to these rules here. So basically, when you lodge your March BAS, that's the first BAS that's going to kind of set the scene for this for the ATO and how much they give you back. But what it'll do is you add up all of your, like when you lodge your BAS, you'll be reporting your total wages for the month or the quarter, and also the total pay-as-you-go tax withheld for the month or the quarter, depending on your lodgement cycle and how many team you have. Now, when you do that, the idea here is that you won't have to pay that pay-as-you-go tax. You might still need to pay GST on your BAS, but up until a certain limit, you shouldn't be paying your pay-as-you-go withholding tax. Now, those limits are, there's 2 timelines. There's the March to June period. Now, your maximum claim throughout this time on this stimulus is $50,000. But if you're an employer, your minimum payment is $10,000 for this 4-month window here. So when you lodge your March BAS, for most people, you'll have at least 10 grand credit for your pay-as-you-go withholding, which is pretty cool. And depending on the size of your business and your BAS bill, that may even soak up some of your GST. Who knows? I think everyone's a bit different there. And then there's a second 4-month window here, July to October, and there you've got another 50 grand again. So it's up to $100,000 of 100% of your pay-as-you-go withholding. Minimum of 20 grand. Now that's over both of these. So minimum 20 grand over the 8-month window, up to a maximum of 100 grand. So that's also going to help. And yes, you could, at the same time, you could be eligible for JobKEEPer. You could also be eligible for this as well, which is very, very good news. Now, this is going through this measure at a pretty high level. So yeah, you're more than welcome to ask questions on this one in that Q&A box. Now, in terms of the timing, so you need to be careful with your March BAS. We're working with all of our clients to make sure this is lodged by the 28th of April. And that's when we understand these credits will be on your BAS. Keep in mind that for most businesses, you're not going to get cash back. Some might, but you're not going to just submit your BAS and get a big check. It's a credit, or it's money that you don't have to pay and that you can deploy elsewhere in your business. Now, the key to this is lodging your BAS, and I'd recommend you do this on time. Can you pay contractors? And the answer here is no. Sorry, I haven't updated this slide for the latest fact sheets. It's definitely a no. Can you pay this to yourself on a salary? The answer here is yes, you can. If you are not on your own payroll, though, like some directors or some business owners are not on their own payroll, especially if they're in a trust or a sole trader, then unfortunately this is a no. You're not eligible, and basically. They've pissed off a lot of business. If you were on your payroll and structured as a company, and then you do get it, but most other business structures don't get access to this, which for themselves, for your own wages. And so the accounting industry, like we've got 4 big bodies in the accounting industry: the chartered accountants, IPA, CPA, and NTAA. Anyway, they're all getting together and basically submitting reasons to the government why this is extremely unfair, and the idea here is that we overturn their decision, and this can be accessed for the business owner's tax as well. But unfortunately, what we're saying to our clients, and the instructions we've got from the ATO, is that if we start playing around and adding business owners on salaries where previously they weren't, we're going to be in a lot of trouble. So accountants are going to be in trouble if we go and try to manipulate wages, and so is the business owner. You'll end up getting nothing. You won't even get the minimum 10 grand in each window. They'll literally take it off you and probably charge your accountant with some serious offences. So it's not good, and we've just got a blanket no on anyone who asks us to do that. But again, hopefully the government listens to the accounting bodies and we are able to factor it in somehow. And keep in mind also, for business owners who aren't eligible here, you might be eligible for JobKeeper. So that's something to keep in mind. Not all is lost. Now, this isn't a government stimulus measure, but what it is just practical help that the ATO are giving you as business owners or as just individuals or taxpayers. Now, I've got the phone number for the ATO's emergency assistance line. So, if you're impacted by the virus, the COVID-19 virus, financially, then which I believe is pretty much everyone in Australia, then you can give these guys a call and negotiate some of the following things. So, if you pay as-you-go quarterly tax on and you've got your March instalment notice, then you can actually ring them to ask them to vary that to nil. Especially if your income's dropped, then so is your tax bill. So that's one thing that we've been doing for clients. You can get a credit for your December and September quarters that last year, so you can get a credit on your instalment as well. So those two are kind of related to each other. If you're paying some ATO debt off, you could even ask them to stop the payments for 3 or 6 months. We've gotten both as results for our clients. and we managed to pause someone's payments for 6 months, which is cool. You can also ask for interest and penalties to be removed, and I think they're automatically doing it for certain interest and penalties after a certain date, which is great. You can ask for extensions to lodgement dates. Keep in mind though, some of these stimulus measures, you have to have up-to-date tax returns and BASs. So make sure that you're not delaying tax returns that are going to stop you being able to access these, JobKeeper or things like that. And then low-income payment plans is another thing that you can do as well. If this sounds like something you need to do, pop out your to-do list, write down this phone number, 1-800-806-218, and give the ATO a call. That's something I'd recommend that you do. Alrighty, I'll just check to see where we're up to in the presentation. Well, that's actually basically all I had to share today, apart from answering any more questions. I've covered a lot of information, and even though it's been a lot, there is a lot more detail to each of the strategies. I think I spoke to Ida before the webinar. She's going to leave our details available, and basically we're offering a bit of a strategy call to anyone who's watching and who has some more questions, maybe more specific to their business. And we are business as usual at Inspire, which is working from home. And if you aren't getting the help you need, then we are here to help throughout a bit of a tough time. So feel free to reach out. And apart from that, thanks for spending your lunchtime listening in to us. I'm going to spend the next few minutes for any Q&A questions that come through. Thanks so much for listening.
Thank you, Ben, for that fantastic presentation. As Ben mentioned, I will be sending out an email tomorrow with the presentation along with the PowerPoint slideshow. What I will do is I'll also include Ben's details in there, so if you do have any questions that come to mind, feel free to send them through and he'll be more than happy to answer them for you. So on behalf of Ben and APPA, thank you for joining us today, and I hope you all have a lovely afternoon. Thank you, Ben.
Fantastic. No worries. Thank you so much, Ada. 5 days to 3 days. We can use our leave entitlements to top up the 2 days if you have it. Yeah, I think the thing there, Phil, is to make sure that you reach mutual agreement. If you're the employee, just have a chat to the employer, and as long as you both agree to that, I think you're all good to go. Now, Fred has asked, sorry, I think that might have been related to another question. Let's see if I can pull that up. Sorry, Fred, we might need to get that question re-answered, or feel free to reach out to us. Now, our office phone number is, I'll just pop that in to the person who's asked that, so I'll just pop that through there. But the better thing to do even is to book in a time, which Ida will send you through the link for. Basically book in a time for a 20-minute strategy call. There's no charge there, but we basically see if we can help you with what you're asking for, and we can go from there. Well, that's all the questions that came through, Ida. So I think we might finish up.
Yep. No, I think we can wrap it up. So thank you very much again, Ben.
Awesome. Thanks, Ida. Thanks. Have a good day.
You
Bye.
too. Bye.